All right, everybody, welcome. This is Trader Travis with my partner in Profit, Peter, on the line. We are back with our weekly recap. Of course, everything we're sharing is for educational, informational purposes only. It's not to be taken as investment advice. So this recap may be shorter. We don't have much. We are actually, let me show you my screen here. We are actually in the middle of a slight market pullback here. So the market lost roughly the last couple of weeks or last week or so, the market lost roughly about 6%, give or take. And so we are following our trade plan. I looked in the members area. A lot of members exited their current trades for losses. That is to be expected. That's normal when you're going through a transition period like this, transitioning from an up market to either a down market or just a slight pullback. It's tough because emotionally you don't like, it's like society teaches you that losing is bad. Losing is a part of trading. So it takes a while to get used to that. All right. So try to work through those emotions. Try not to let it get too emotional. Somebody said they lost 6% on all their trades. And I'm like, that's actually not bad because the market actually pulled back 6%. The benefit with us is the pain stops, right? We know exactly at the point where our pain will stop because we follow a strict risk money management formula. But yeah, you may have lost 6% really quick. And I was telling Peter, that's the part that hurts. Is like it happened so quick, right? But think about how a buy and hold investor feels. They lost 6% of their account, but they don't have any guarantee of when the pain will stop. They have 100% of their account at risk. They lose 6%. They're terrified because that 6% could go to 40, 50 because they have so much of their account exposed. Us, we lose 6% and the bleeding stops. We're like, I'm not losing anymore because I got out all of my trades. And because of what we know, we understand that this market is setting us up for new entry points. And we're going to easily recoup that 6% in the next few weeks if the market turns around. So that's what I want to say about the pullback there. And on I'm releasing next week for members my second week case study where I talk about this concept of using intelligence over anger. You can get mad at, tweet proofing your portfolio and all this other stuff, or get mad at people causing volatility in the market, or you can use your intelligence and realize that this actually is helping us out. Peter made some money in the last few weeks. I made about $2,000 in 2 days based on the pullback. So these pullbacks, this volatility is actually helping us and is setting us up for new entry points. All right. But if we get angry, we can't think like that. We can't find the opportunities in the market. And you'll see this in the case study, but GLD, right? What did GLD do the last couple of days when the market corrected? It shot up. So you think you could have made money from that? Because people flock to bonds and gold, right? When there's uncertainty in the stock market. TLT, the long-term bond, what did it do when the market pulled back? It shot up in price. And actually, when we come back from our summer break, Success Academy members, on the live call, I'm going to show you how insurance companies, it's so brilliant. And I've covered this in Success Academy years ago, so it'll be a blast from the past, how you can actually trade options on a bond, right, using the Buffett strategy. And what's worst case scenario? You have to buy a bond fund, and is that really anything bad, right? Because if the market ever crashes, what's the bond fund most likely going to do? The same thing it just did. So it's like not only are you earning 12 to 24% off of that bond fund by trading options, if worst case scenario happens, you have to buy it, you're buying a bond fund. And then anyway, and I'll show what insurance companies, the method they use, they can offer guaranteed rates to people who buy like whole life insurance policies and things like that. How do they ensure that payouts don't bankrupt them? It's a really slick strategy, actually. So I'll show you that because one of my insurance agent friends walked me through that. I was like, how do they work that out? And when he told me, I'm like, I was like, that makes sense. So I can't wait to share that. But again, that's going back to that concept, using intelligence over anger. If you get upset and get angry at losing money or the volatility in the market, at something the president says, you'll never find ways to make money. So always use your intelligence over anger. So before I turn it over to Peter, I have, Peter talked, I don't know. We talked about, anyway, last two things I'll say. Peter talked about this. I went to a class recently that talked about this. This is what hedge funds and professional institutional investors do. If you think about it, they made money, right, from this dip that recently happened in May up to now. Then they sell off, and that's going to trigger a lot of stops, a lot of anyway, they scare out the timid investors, the people scared who have no business being in the stock market because they let their emotions run over them. They let their emotions take over. So what do you think the professional investors are going to do here in the next few days? The market fell 6%, right? They cashed in already at the top. That's when selling started. So you sold all your stuff. They're going to come right back in, buy the stocks back at a lower price, ride them up. And then when they're ready to take their profits again, they're going to do the exact same thing, scare out some investors, make the market tank. They're going to come back and buy it at a lower price, rinse and repeat. It's just a repeatable cycle you have to learn how to spot and how to benefit from. Last thing, I want to follow up on what I talked about with following a proven wealth building blueprint with Beyond Meat. Gosh, I can't even get the signals. BYND. Last recap, I talked about how people want to speculate in IPOs like Beyond Meat, Uber, and all these other things, and that you need to have somebody wealthy that can show you a blueprint to be able to take advantage of these high flying stocks where it doesn't bankrupt you. And a lot of people are betting their future on Beyond Meat. They probably have way too much of their account at risk. And I'm like, that is just not smart. It's not being a smart investor. And Beyond Meat, just in the last few weeks, has lost over 30%. Now imagine somebody that took out a home equity line of credit or a mortgage. Trust me, I've been doing this a longer time. I can guarantee there's at least one investor that did that, or who bet most of their account on Beyond Meat, right? How do you think they feel right now that Beyond Meat has lost 30% of its value? So that's the point. I don't want to get people to that sick in the stomach feeling that you just lost all that money and there's nothing you can do. Now compare that to the blueprint I learned, where if you follow the conservative blueprint, you would only have 1 to 3% of your entire account on the stock. So when it lost 30%, you're not worried, you're not scared, you're not freaking out, because you're following a certain blueprint where the risk doesn't really take you out financially. And then I also showed you the blueprint I follow with Pinterest, right? And it's where not only did I use profits from another trade to speculate, I made sure that, this didn't take up too much of my account value. And I want to show you the results of the blueprint I follow. And I told you exactly what I did. Look at the last recap. I won't cover it here. I'm going to show you where my mouse is towards the bottom right here. Profit and loss percentage, 1,800%. Last week, after Pinterest had good earnings, the profit and loss percentage was 2,200%. So why is it so high? I was like, is that right? And I was like, yeah, it is right. Because what happened was, again, I used an option strategy that brought in income. Let's say it was, I think, $1,200. I then invested all of that $1,200 into a call option. In the end, I wound up having to come out my own pocket $50. That's it, to be able to a risk-free position in the stock. So then the profit was like $2,200 after earnings. So we divide that by $50, my original investment. That's about 4,000%. And it was something like that. It was some extreme percent. And actually, I'm losing money now because the stock is pulling back. But again, because I follow a specific blueprint, think about that. Would you rather be losing 30% of your money on Beyond Meat, or would you rather be in a position where, I'm making 1,800+% on my money because I'm following the blueprint? So that's all I have to say about that. I just wanted to follow up to show you that's the results. And even if Pinterest crashed on earnings, I still wouldn't lose any money. It's not a big deal. So that's the position I want you to be in if you're speculating on IPOs and things like that. Set yourself up in a position, but yeah, if it works, you're going to make a lot of money. But if it doesn't work, you either don't lose any of your own money or you lose such a small percent. It's not a big deal. So that's all I have to say about that. Now, Peter, I'm going to turn the floor over to you.
Hey, I got a quick question for you.
No question.
I noticed on what?
I'm just joking. Go ahead.
I noticed on your Pinterest calls, they were well over. I mean, they were huge. You paid like $900 for them, but they were at $3,300 or whatever. I was just curious why you didn't employ one of the strategies you employ, where you sell off one of them when it hits the 100%.
Oh, actually, I could. That wasn't even part of my trade plan, because that strategy is to make the options risk-free. Options are so volatile. One of my main goals is always to make option trades risk-free, because options are so volatile. You could have a 200% gain one day. 3 days later, you could have a 50% loss, right? Everybody's traded options for longer than a year has experienced at least one of those situations where they watch a lot of profit on paper go bye-bye. So my job, whenever I get an option strategy, is to make it risk-free. Take the option risk off the table. Well, there's no option risk already. Like this trade was
let it run.
Yeah, I can let it run. It's already risk-free for me. So it's either max profit or max loss for me. It's already risk-free.
Okay.
I don't care what happens. So great question, but that's why.
Okay. And I noticed that thing had like 500 days to it. Is that right?
Yeah. Yep.
Oh, okay.
So
if Pinterest does go through the roof over the next year and a half, you're going to have a crap load of money.
Mm-hmm. Yep. And I'm going to reinvest that.
And if it doesn't, you didn't lose a dime.
Nope, didn't lose a dime. So
or time. You didn't lose your most valuable asset, which was time, because you don't have to do anything with it.
I don't have to monitor it. I don't have to log in, nothing.
And it kind of drives me. So I'll just mention this here. I told Travis I was working on an article and a video that I'll pop out. And when I do, it's actually on stock buying. And it's not going to be a judgmental thing or anything like that. It's just going to kind of give you my take on it and just give you food for thought. If you guys like to invest in stocks, buy them low and sell them high, kind of give you food for thought on that. So it should come out within the next week. I'll have it done. So you guys, I'll have Travis leave a link to it on this video as well when it does come out. You can see my screen, right?
Mm-hmm. Yeah. And I see your notes and the charts. Yep.
Yeah. So just look at the bottom portion, because this was one of my other ones I did a while back. So I just wanted to because of this market pullback, and we had a lot of members that were talking about how we follow Market Club templates to get in and out of trades. And we also do what's called price point profits. And unfortunately, Travis was just mentioning to me how I've created this problem, I think is the best way to put it. I kept talking about price point profits. So we've had some members doing price point profits when we don't really have a template or anything out on it, and sometimes it gets you in trouble if you don't know all of this stuff. So I apologize for that, because I know a lot of you guys started doing price point profits based on what I was talking about, based on a video Travis put out a while ago. And but I had some SPY trades. When the red weekly hit, I got out of my short-term ones, and there was a great question that came in from one of the members. Hey, how do you handle the longer-term ones? And I'll be honest with you, I didn't know exactly, because I'm new at doing price point profit trades as well. And I was like, do I really want to exit my long-term spreads on a weekly? Because a weekly is a longer-term signal, but it's not like a monthly, right? So. So I decided not to exit my longer term spreads based on that red weekly. I exited my short term ones, because I knew with that weekly, even if we get a green weekly this week or next week, it wouldn't have time to catch up. So I took my losses on my short term spreads, and on my longer term spreads, they're still open. Well, this morning when I woke up, I was thinking, ooh, they're so far in the money, because if you look at my notes here, I have a 304, 303 put option right now. So if you know how spreads work, I've sold the 304 and I'm protected by the 303. I own the 303. But that's very deep in the money, right? Because the market dropped all the way to $282 yesterday. So I started thinking, ooh, I could get assigned. So I wanted to kind of put this out. This is how I work through assignments now. I've been through them on both sides, both with bullish and bearish trades. So initially, they kind of freak you out initially until you start doing the math. So that's what I did here. I woke up this morning and I said, hey, just in case I log into my account and I see I'm assigned, let's see where I'm actually at. So you have two options to handle an assignment. You can exercise the call options or the put options you own to get rid of those shares that you were just forced to buy. Or you can do option two, which is to sell the shares you were forced to buy at the current market price and then sell your put and see what it's worth. So I kind of wrote these out. Now, don't take this as a way to try and make more money. It's not. It's a way to get out of your trade by keeping your risk the same. So you can't play with this. You can, but if you do, play with it at your own risk. I'm not telling you to do this, but it allowed me to look at what would happen had I been assigned. So if you look at the top, if I had been assigned, I could easily unwind the trade. I'd take a $400 loss. Well, it just so happens that was my max loss anyway on the trade. So I hit my max loss, right? Because that's how options work with credit spreads. If you know what you're doing, you knew what that number was ahead of time. But I can tell you from experience that this can sometimes be a little, it can be a little nerve-wracking when you're trying, because you're doing something in your trade platform you don't always do, and that's exercise an option. We know we have the right to exercise our option, but we don't always do it, so it can be a little nerve-wracking. Well, option 2 is actually easier, less nerve-wracking, and if it had happened today, I would have actually benefited from it. Doesn't always work out this way, but because of the volatility, it would have. If I had been assigned my shares, I would have bought them at 304. That's 121,600 bucks. I would have sold them. The market opened at 285 today, so I would have sold them at 285 for 114, which would have left me a deficit of $7,600. But my puts were actually worth $2,200 a piece. I owned 4 of them, so they would have been worth $8,800 or a $1,200 gain. Now I can tell you right now, if I had to play that out, it wouldn't be this good. It would only, I think my puts are only worth now like, I'd have to go look at them, but right before we started recording this, Travis, they were worth like $1,900. So that profit starts coming down. But the goal of this, the point of this was to just show you that there's no fear in that assignment. If you do your math correctly and you're doing your risk correctly, don't fear assignment. Don't fear these pullbacks, and don't use the fear of assignment to get out of your trade. Don't say, ooh, I don't want to get assigned, so I'm going to exit this trade. If you didn't get an exit signal, then don't exit the trade. If you did get an exit signal, fear of assignment shouldn't be your number one priority. It should be you got an exit signal, get out of the trade. But I did just want to throw this out there that this is kind of what it looks like, and you can do all this stuff with your platform. So don't fear assignments. Don't ever get out of a trade because you fear an assignment. Just do the numbers. And if you don't understand this, do not place any selling strategies on options, because if you don't understand what I'm talking about, you haven't earned the right to work with these strategies, and you're going to get in big trouble if you do. Because selling strategies, as I always like to say, are the weakest position. That's my opinion. I'm sure there's people that will contradict it, but it's the weakest opinion because you have no rights when you sell an option, only obligations. When you buy an option, you're in the strongest position. You have nothing but rights. So just my opinion. So I had another point I was going to make, and I can't remember what it was, but so I'm not going to make it. But that was it. That went on longer than I should have, but I think I say that every time too. Sorry.
People value your opinion, Peter. It doesn't matter. I was gonna say something to you. You said some. Oh, fear. Going back to fear. This is an old. Do you remember the Success Academy live call where I talked about another millionaire I learned from about write down your worst fears, your life's worst fears?
Yeah. I remember you talking about this.
Yeah, it might actually still be in the training. It's the worst fear exercise is what it is. I don't personally, now that I've learned that from a millionaire, oh gosh, it was such a huge, it was one of those huge $1 million tips, changed my life. Peter keeps saying, don't fear assignment. We always say, don't fear assignment. I'm going to take it even broader. Don't fear anything. And what this millionaire taught me to do is write down your life's worst fears, or you write down anything you fear, whether you fear assignment, you fear a market crash. He said, don't fear it. Write it down. And write down, if this thing happened, the thing that you fear, what will you do? And he said, once you have a plan of action, you don't need to fear it anymore. You don't need to stress about it. It's almost like robotic. Once it happens, you follow the plan. And my personal example was, dying early of cancer or whatever that, because of my own dad. Yeah. And so he was right. Once I did that, I was like, it's like all this time I had feared it, but I never had a plan. And then once I came up with the plan, I'm like, oh, I don't need to fear that anymore. I got it taken care of. Like the thing I was fearing is now taken care of. It does in fact happen. So same thing. If you fear assignment, write down exactly what you're going to do if you get assigned, right? You have a plan. So once you have a plan, is there really anything to fear anymore? No. But people fear the unknown because you fear you're not going to know what to do. Is going to be a worst case scenario. So actually walk through that if that fear happened, that whether that's assignment or anything in life, walk through if that does in fact happen, what are the consequences, what's the pain, and then walk through the plan of action that you're going to take. And keep it, write it down or keep it in your head, and you'll find that that fear kind of dissipates or either goes away completely. So now it might turn into a worry, but it won't be a bad fear anymore. So, but yeah, so that's my 2 cents on that.
That was good too, and that's true. When you kind of plan it out, you can kind of see, and that's what I started doing with these, because in the beginning I was just like everyone else. I feared that assignment, no matter how much I knew what you and I trusted what you were telling me. It's always the fear of the unknown. Someone jumps into a pool and they tell you, hey, it's deep enough, you can jump in, you're not going to hit the bottom. You still fear jumping in if you've never done it before, right? So
yeah.
But you're right, when you just map it out, and that's kind of what I did here. I just woke up this morning, I said, I want to map this out. And that I didn't do this because I was in fear of it. I did it more because the last time I did get exercised, I followed option 1, and Travis had told me, okay, that's fine. He doesn't do it that way. He follows option 2. And I'm like, you can't really plan that one out when you're not in a trade. It's hard to see the numbers because they're imaginary numbers. You can't know what that put option will be worth, right? So
yeah.
I was like, I woke up this morning, I was actually excited because I'm like, I'll actually have the no BS numbers. I'll be able to look at it and see how it plays out. And, that's what's great about always getting into trades. And especially when you're doing this on paper, it makes it makes it even more valuable because you can't lose any money. That's why I always keep telling the members, keep paper trading this stuff, especially now. Paper trade a bullish spread right now. See what happens. I mean, it's the best time to do it. You learn so much from doing it that way.
Mm-hmm. I think so too, but hey, I'm tired of repeating myself, so
so I'll do it for you. Anyway, that's all I have, Travis. I'll stop talking.
Yeah, that's all I have to say. Hey, I don't know the time limit, but hey, we hope you all enjoyed this. If you have any questions, post it below this video. We'll cover it in next week's recap. Until then.
One last thing. I always forget to do this. If you like the video, give it a thumbs up. If you're not subscribed to the page, subscribe to the page so you'll get notifications every time we put out new content. If you didn't like the video, don't just give us a thumbs down. Tell us why you didn't like it so we can help you make it better.
Yeah, there you go. You tell me you forget. I always forget that. All right. Y'all take care of that stuff. We see you next week. All right. Bye-bye.
See ya.